Hi everybody, welcome to the webinar tonight. My name is Tony Catt, Director and CEO of Catapult Wealth. It's a new thing we're trying tonight. We've been involved with the Future Generation Foundation and the fund now for the last few years, and it gives me great pleasure in this COVID environment to pull this together with some multiple people. It'd be nice to have us all in the same room at the same time, but obviously tonight we can't. But we've got the wheels still have to turn, and I think it's an important topic to talk about. And so we've had in this fund, the Future Generation Fund, we've got over 120 clients invested in it through the mechanism which I'll let Caroline and Geoff talk about. We're going to make a sizable donation on behalf of the fund managers and the fund to Operation Flinders tonight, and I've got the Deputy Chairman of Operation Flinders here, Kevin Scarce, who will tell us a bit about Operation Flinders. So thanks to Caroline, thanks to Geoff for being here tonight, thanks to Kevin, and thanks to everyone for joining. It gives us great pleasure in these times where it's hard for charities to raise money, and it's really hard, with event management, and Kevin and I were talking about it before. It's really tough for some charities to raise some money, and so handing over some much needed funds for charities at this stage is really important. And in times of need where people are going through significant mental health stress, financial stress, and generally it's just nice to talk about something good for a change. So thanks guys. I'm going to pass over to Kevin. If Kevin could wants to talk you through what Operation Flinders does, what the funds are, what the foundation's about, and how it works. So Kevin, over to you.
Yeah, so good evening everybody. I've been on board for probably 7 or 8 years, on and off. So what we do is we take kids that are dropping out of school, getting themselves into trouble. We take them for a 10-day walk up Yankonina, northern part of our state, and we really allow them time to think about their life and what they want to do. We're in our 30th year. We've just touched 9,000 students, and we trace them once they complete. We bring a leadership course, and we're now looking at developing an opportunity for some of those who pass through the course to get employment. So it costs us about $2 million a year to run the program, and we get funding from the state government of about $450,000. We need to raise the rest. It makes a hell of a difference to kids, and we've got so many testimonials and examples of kids who are off the rails, getting themselves into trouble, wasting their lives, and bringing them back on the straight and narrow, and now producing terrific individuals for the future. And we are very appreciative of Tony.
Thank you.
Who's sat on the bike for 700 kilometres recently for the 6th time. It's terrific to have the support of various groups to help us do this work. It's important work, and I'm delighted to be here tonight.
Thanks, Kevin. The 700k bike ride, Caroline and Geoff, as well, just for your benefit, is that we ride from Adelaide all the way to the Flinders Ranges, and there's about between 10 and 14 of us that ride it, and we raise over $100,000 on that bike ride as well. And it's not fun getting on the bike after every day, after doing 150 k's every day, but I love it because it's actually the Flinders Ranges where they take these kids is a beautiful part of the world. I don't know if Caroline, if you've ever been there particularly, but before I did this bike ride, I had never ever been to the Flinders Ranges before. And anyone who's out there listening, if you haven't been, you've got to go, because it is a much prettier place in the world than you probably think. So, thanks, Kevin. And it was actually this year. Actually, I went up to Yankonina, the station, only 3 weeks ago, and we met some of the kids and what they go through, and from different schools and different backgrounds. And the program probably only just tipped touches the tip of the iceberg in terms of the problems, and but it makes a difference. And if we can make a difference just to one kid's life, it's a really important cause. And I think that we do take for granted sometimes when we're in families that are with parents that love you and feed you, and you feel like that's normal. And when you talk to some of these kids, it does break your heart. And so I'm really happy to be involved with this charity. So I'm sure there's lots of worthy causes out there, and this is just one of them, but I'm really proud to be part of this one. Caroline, I might pass over to you. If you could talk to us a little bit about, you've been in the chair as CEO now for a week, you said, or a few days. Tell everyone a bit about the foundation, how it maybe came about, and what the background to it is.
Yeah, no, I'd be really happy to. Thank you very much, Tony. Thank you for including me. But Kevin, gosh, what you and the team are doing is really remarkable. And I think, I'm always really impressed with what the charities do and what you're doing, because really, I think that's what it's all about. So as Tony said, this is my very first gig. I actually joined last Monday. And I just thought you might want to hear a little bit about why I wanted to lead Future Generation. I was already on the Future Generation Australia board. I love the concept of social investment returns. So I worked in the banking industry for nearly 20 years. And it's so great to be able to work with people who are working really hard, pro bono. So we have a really impressive investment committee, and we have 30 managers. And most of them, the fund managers, most of them you probably already have heard of. And they're all making a really positive difference to Australia's future. And for me, that's incredibly important. I think, all of us in business needs to play and is playing a much bigger part in making that contribution. And we have a responsibility to do better. And so if I look at the impact that we have on the world, we're actually tapping into that. And I want us to be the company, and I think we already are there. I think what Geoff has achieved is truly phenomenal, and the previous CEO. And I want us to be the company that leads and drives real change and influences for the greater good. So as I said, it was founded by Geoff Wilson, and that was in 2014. And I am really just the warm-up act. Like, I know you'll want to hear about his, investments and, what to do and what's happening with the markets. But truly, I do think that besides, what we do on the fund investment side, it does have that very unique social returns. He obviously was the first to do it. As you would expect with Geoff, he was very much the first. And I think what I really like to say is, as shareholders, and I am one as well, when we purchase shares in FGX, which obviously is the fund that invests in Australian stocks, or in Future Gen Global, which is the fund that invests in Australian stocks, you've got exposure to some of the best boutique fund managers at absolutely no cost. So in terms of our charity partners, what is unique is they receive an annual investment as well. And if Future Gen's fund managers are managing more than $1 billion now on a pro bono basis, they forego the fees to allow that annual social investment, which is equal to 1% of assets each year. So for Future Gen Australia, that's 5.3 million we are giving this year. And since inception, that's like nearly 27 million, or 26.8. Geoff likes us to be, precise on this stuff. But with Future Gen Global, that's 6.4 million this year. And that's 26.2 million since inception. So, that's 53 million in charities that are focused in supporting children at risk and youth mental health. So every time I think about purchasing, or, if anybody buys a share in FGX or FGG, you're receiving, great exposure, no cost to you, but you're becoming a leader in the social impact space. And I think that's really, for me, that's really important. I think, obviously we've just had a great example in terms of what you've been doing, and bike riding and everything else, and what Kevin's charity is doing. But I just thought I might run through one, in terms of some of the charities that we support, as well as all the other charities that so many of our investors support. For FG Global, it's children and youth at risk. And our charities there are the Australian Indigenous Education Foundation, which basically takes Indigenous children and puts them into private schools and pays for their funding all the way through senior school. Then there's the Australian Children's Music Foundation. There's RAISE, which is all about education, mentoring, helping kids at school. Diabetes Kids Fund, Youth Off the Streets, Giant Steps, Lighthouse, Mirabelle Foundation, and Deborah. One example I'd like to use tonight is Acts for Kids. It's an Australian charity, and that operates 28 centres. And that's got a team of 430 staff, and that's from Adelaide all the way up to the Cape York Peninsula. And what they do is they give free therapy and support services to children and families who have basically experienced child abuse and neglect. So what they do is they provide integrated therapy for those children, and that's what Future Gen actually funds. And integrated therapy is speech pathology, occupational therapy, and psychology services. And one example, which I think is quite lovely, is a young boy called Jared, who was referred to them after suffering a very significant neglect issue up to the age of 10. His life was very unpredictable. He rarely attended school, and he was often angry. He was actually reunited with his father, and Act for Kids helped Jared basically gain that trauma therapy support. And now he's back at school with his father, and his father has sort of expressed so much gratitude for the support they've received. So this intervention has worked, but he's one of 29,000 children that has received this much needed support in the last 12 months from this organisation.
Yeah.
So the other fund is obviously Future Gen Global, and that's about youth mental health. And that supports 8 charities, and that's all about improving the life of young Australians affected by mental health issues. That's Black Dog, I'm sure most of you would have heard of it, Brain and Mind Centre, Origin, which is one of the world's leading research organisations, Reach Out, Sane Australia, Kids Helpline, and Butterfly Foundation, which is about early intervention for 18 to 25-year-olds with eating disorders. The other one with the example I'd like to use is Youth Focused. They're based in WA, and basically there it's the leading cause of death for Western Australians under the age of 25 in terms of suicide. So their mission is to reduce youth suicide, and they do this by supporting young people between the age of 12 and 25 years. And it's all about the issues, as you can imagine, of depression, anxiety, self-harm, and suicide ideation. So an example here would be Alaya. She was homeless, struggling to finish year 12 and facing a range of mental health challenges. And she joined the vocational support program, which we actually set up, FG set up. And that was about overcoming mental health, but also because you also need to get education and employment. And she was actually the first graduate of the program. And now she's on her way to a career in aged care. And, as you said before, both of you, this continuing lockdowns have impacted so many of our charity partners, and, you haven't been able to fundraise. So, you've had to adapt really quickly to, sort of deliver online support and online fundraising as well. It's just a very, very difficult time. So I think, I'm really enjoying my role. I've got a hell of a lot to learn, but there's so much to do. And I think the fact that we offer these 2 fantastic funds, that has the investment returns and also the social impact is incredibly important.
We certainly get asked more and more, Caroline, about the ESG investing and things like that. And so it's certainly, it's nice to be able to give back in this way. And in terms of the fund managers, you said, was there 30 you mentioned?
Yeah, God, there are actually.
I was trying to think of some of their names. So obviously there was this, I don't know if, well, you might be able to run through a few of them.
Oh my God, you're really going to make me? I don't think I can. I can. So, I think the names that you would know, and I'm sure, there's Paradise. So for example, on the Australia side, we've got Paradise. We've got Regal, we've got obviously Wilson Asset Management, that's obviously a big one for us. We've got Benelong, Cooper Investment, Firetrail, Sandon, L1 Capital, Finia, Benelong, so I've already mentioned that, but there's 2 different funds, Climb, and then Sage Capital, Centennial, Tribeca, QVG, Smallco, and Lanyon.
Yeah. Yeah.
And do you want?
Adelaide
I mean,
one.
you are.
Daniel's the Adelaide one.
they've got pretty good performance actually.
Yeah.
And then with the global fund managers, that's Magellan, Cooper Investors, and Antipodes, Morisco, Caledonia, Nico, VGI, Elliston Capital, Munro Partners, Avenir, Paradise, WCM, and Morphic.
Nice.
Which you'd be across all of them anyway.
Yeah, I certainly know Caledonia out of Sydney, and I guess it's just really nice to hear that they're all willing to donate their time, and their expertise.
And so much time. I can't, I mean, incredible amount of time that they actually donate. But also the investment committee, you've got a lot of fund managers on there, you've got a lot of, you've got Jana, you've got, all of the various sort of Morningstar. So you've got really great people actually helping us with the investment selection. It's really, really, it's fabulous. But what do you think? What are you seeing out there at the moment?
In terms of the fund or the markets, or well, I think that the drama you've got, I call it the Tina effect, which you might have. I mean, there is no alternative because. And that's probably where, in the financial planning and investment context, the financial planning community have gone from 28,000 financial planners, and we're down to under 19,000 now, thanks to changes in the industry. But it's at a time when we're about to go in the next 10 years to have, I think in the next 10 years, we're going to have over 6.9 million Australians over the age of 65. And so we've got an enormous amount of demand for retirement advice and investment advice in a world where you just can't put your money in a term deposit and earn 7% anymore. And people are very, it's troublesome. And you just throw COVID in on top of that, and you throw property markets all over the place on top of that. And it's a really interesting time, and it's a tough time for people to know where to turn. And so we're finding the demand for trusted advice and sensible advice is really important. And that's where having good fund managers like you have been listing to try and navigate those waters is challenging. And so I think that they're certainly in demand and have to do a difficult job in, I'll call it, very unpredictable markets at the moment. So, really
unpredictable.
Yeah. I don't think I would have ever predicted the housing market was going to go up 30%, but
nor I. I'm living in Sydney, and it's like rural New South Wales. I mean, Adelaide prices have gone up. You're right. My friend's there, and she said it's incredible.
Thank you.
How are you, mate?
No, everything's going well. Sorry about the other day.
No, you're fine. All good.
I was all pumped up to. I had all my lines ready.
Oh yeah, you're ready for it.
Yeah, I was going to say how my dad, at one stage, if I'd done that course, up in the Flinders Ranges, it would have been fantastic, because my dad at one stage thought he's going to send me to be a to do an apprenticeship with the bootmaker up the road. And,
oh, really?
And that could have potentially saved me, but.
Mate, I guess my opening gambit today with the markets is I just wanted to get probably your perspective on, a lot of clients are talking about, we've got 17 million people about to come out of lockdown. I can't imagine, I sort of worry a little bit about supply chains and labour supply issues. And I'm actually a little bit personally worried about the AGM season being a bit soft, to be honest. I think we saw Flight Centre the other day, reporter say can't give guidance sort of comment. How are you feeling about the next few months from a market's point of view?
Well, I mean, it is, well, first of all, we've had a incredibly strong equity market, that has really been driven by incredibly low interest rates, free money, a lot of liquidity. And I suppose what worries me probably more than anything else is there's a lot of new players in the equity market, and they don't realise that the market just doesn't continually go up. And look, it reminds me, one of the directors of one of our companies, I was talking to them about the market and et cetera, and he was saying, "Oh, look, a couple of electrician came over to do some work at his place, the other day, and he said, normally he has a partner, and he said, "Oh, look, where's your partner, today?" And he said, "Oh, he's retired because what he's doing now is he's just investing." Trading cryptocurrencies.
Oh, yeah, wow.
Yeah, and you got a situation, and he said, "Well, so what's his technique?" And he said, "Oh, it's a simple technique. He just buys them and he holds them till they stop going up, and then he sells them." Now, I mean, if we all knew that, then if we all knew that technique, and then we'd be we'd be very rich as equity investors. So. I mean, that does worry me. Whether there's no doubt supply chain, there are problems with the various supply chains. Katrina, who manages, WAM Global, she's based in New York these days, and she went to see Adidas just recently, and just saying how Adidas, they're having real problems supplying stock from Asia because of COVID. And the low vaccinations rates, they've lost a couple of months of production, and we're seeing it everywhere. Like, there's another gentleman I was speaking to, is in the building game, and he just said a lot of his contracts that he signed up to 6 months ago. Now he's really getting squeezed because they were fixed price contracts, and prices have gone up. So that is a big risk in this. In the AGM season, will it derail the market? I don't think it will.
No,
I still think there's a lot of positive dynamics behind the market.
Yeah.
Would I be overextending myself in this market? I wouldn't be.
No.
Only because the market's had such a strong run, and as I mentioned earlier, you've got a lot of participants in the market. Really. There's a lot of money looking for a home, and whether that's equities or property. And because of these exceptionally low interest rates, and the fact that there has been little volatility in the market, so people think that, it's very easy. And what we've learned over time is the equity market. You're looking for equity returns because you take risk. So that there are going to be those difficult times.
Do you so talking about new participants, Geoff, super funds with the Sydney Airports takeover, we've got they're bidding for Spark Infrastructure. I think they're involved with that. Smart Group, they're obviously in this bucket as well, where they're getting lots and lots of money pouring one way, and they don't have nowhere to put it. Are you seeing more of that sort of behaviour going to continue?
Well, there's no doubt, like corporate activity, you'd assume it will continue, and it's a classic. Like a lot of this corporate activity probably should have been occurring 12 or 24 months ago, but boards like us, as human beings, is they want to do things when they're incredibly confident, so they can see the light at the end of the tunnel. And you probably, I would say, all this corporate activity is probably telling us that maybe we're a little bit closer. To a high in the market, and because it's occurring now. One of the interesting things is, last week there was, I think 4 takeovers or 5 takeovers on one day, or earlier this week. Now most of those were not cash takeovers.
No,
those script. So it's really, to me, to drive the market higher, is. You've got X amount of dollars that's invested in the stock market. If there was more cash takeovers where people were gearing up, then obviously that would be very positive for the market. Because someone's raising more equity. It's just sort of pass the parcel, isn't it? It's really you're going from owning one equity to own another equity. It doesn't actually take some of the supply out of the market. But I would assume there'll be more corporate activity, and there will be cash bids, and so to me that has to be an underlying positive driver for the market, Tony. I think you're 100% right there, because with interest rates so low and you can borrow money, and in theory, if you can borrow money at say at 3% pre-tax, that's 2% after tax. That's an earnings yield of 2%. Means you can actually pay a PE of 50 times. and it not be,
Yeah.
and it sort of not be, dilutive to you. So, there will definitely be more corporate activity, which has to be positive as well.
One of the things that I would argue that we're going to hear a lot about in the next 12 months is going to be inflation. And we're seeing wage inflation. We're seeing, petrol prices here in Adelaide hit a record today, and with petrol prices and various, as you said, supply chain issues. Do you in the camp that you think the RBA are going to let this wash through to see what happens with the COVID-related events rather than react with interest rates?
Yeah, I think, I am in that camp, and I think you're right. I mean, is this the start of higher interest rates, and is this the start of sort of more secular increase in inflation rather than a cyclical increase in inflation? Well, I actually think it has to be. To me, I think we will eventually. It might be sort of short term. There might be some, obviously significant pressures, as we talked about earlier. The supply chain pressures and other various inflationary pressures. There's no doubt the world's opening up. There's no doubt that COVID is obviously a shocking pandemic and disease. What the world's working out is how to live with it. So we will adjust to that. And there is a bit, there's quite a bit of sort of liquidity still on the sidelines, which sort of worries me a little bit, because I've had people, someone called me up recently and said, oh, look, they've just, I think, had a bit of a windfall in terms of selling a property. They've got X amount of dollars. They were wondering, where should they put that in the market? And I was saying, well, they had a little expert, they've had a bit of expertise in property, and I said, look, why are you going to the equity market? And they said, well, the property market's too expensive. So, the equity market isn't cheap. Unfortunately, all asset prices have gone up.
Absolutely. And I guess, Geoff, when you talk to the guys out of either the UK or the US, given they're probably 6 months to 12 months ahead of us, I'll call it, in a reopening sense, is there any lessons that you have, or any feedback you got out of how their economy / share markets reacted? I mean, their share market in the US seems relatively calm. Like, it's amazingly calm. And it seems to have not been affected at all by this reopening and still 100,000 cases a day. Is there any feedback you're getting out of those regions?
Well, I think it's really that, learning to live with it. I mean, one of the interesting things is, there's been, I think, they've written about it in the US, in terms of job movements, people changing jobs. There's been a lot of that, and that really hasn't sort of started yet in Australia. I think probably for next year, early next year, but that's sort of more that's not a significant trend to invest in. I mean, effectively, it's how, as human beings, but we've always done it. We adjust, and that's what the market's done. It's just adjusted to the fact that COVID is with us. Let's hope the creator of AstraZeneca is right, that the COVID will weaken over time. And that in say 4 or 5 years' time, then it'll be like getting the flu or something like that. And there's no doubt, you see it with the statistics, in terms of the number of people are getting it, the number of people that are getting seriously ill or recovering. From the early days, a year or so ago, a year and a half ago, things have improved significantly.
It's I mean, it's interesting, Geoff, because I reflect on all this focus on getting everyone double vaccinated, and I'm now worried about where the booster shot conversation is going to come in, because you're talking now like the people getting double vaccinated by June, we're going to get to Christmas, and I'm waiting for this conversation to say, well, what next?
That's right. It is like it is the great unknown, isn't it? And like it looks like you will need booster shots.
Yeah.
I mean, in terms of just going back to the market, and I've sort of mentioned it, talk quite cautiously about the market.
Yeah.
And you're talking about Adelaide, and I remember years ago being in Adelaide, and this was around the time of Adelaide Steamship. I was a young analyst going over there for a company visit. And this was the early part of 1987, and everyone knew at the start of 1987 the market was expensive. It had a great run; it was expensive. John Spelman's had some phenomenal assets that he owned. He owned David Jones, Woolworths, big 10% of three of the banks, and so he really had some fantastic assets. And he was nervous of the market, and he had a lot of debt. And what he did is, like early 87, being concerned about what could happen if equity prices fell. He took out a short on the market to protect him. And I remember going over, visiting his finance man over there, Michael Kent, and talking about it. And then the interesting thing is they were short the market for probably, I think, the first half of 1987. And then probably about June, July, they said, hey, look, they kept losing money all the time. And from the start of 87 till before the market crashed, I think in Australia, the market went up 50%. And they covered, they stopped, shorting. The crash came and unfortunately,
didn't make any money.
A lot of wealth, a lot of his wealth and other people's wealth was sort of destroyed. But the interesting thing is from the start of 87 to the end of 87, in the US, the market actually went up 8%, even though they had a crash in October that year. And in Australia, I think it went down 10%. But so the thing is, you can think the market's expensive, but it could, it could significantly go up from here. And we've all been around, Tony, yourself and myself, long enough that you. If you're investing in equities, you're taking risk, but you do get the rewards over time, and it's the ability to take that medium long-term view. So don't get too. Obviously, you'll send this out to the various investors. We don't want to get too nervous about the market.
And I think that's probably the key message that I've been sort of reflecting on over the last month or so is that be cautious without being panicky is probably the easiest way to put it.
100%. Because that's right. As John Spelman's and his team were 100% right in January 87 that the market was high. The fact is it ended up going up another 50%.
It's it is interesting. It's do you is there any particular sectors or parts of the market, Geoff, that you or your team are particularly excited about or worried about?
Well, I mean, there's no doubt. Like the team was sort of positioned for the reopening trade because you all knew that we knew that was going to happen at some point in time. The difficult part was the exact timing of it. And there's no doubt. Like even back when sort of COVID started is. The significant sort of changes in people's behaviour in terms of how they transacted, and like I know, I was a classic example of I used to always the printer would run out of ink. I get in the car, 15 minutes up the road to office work, buy the new ink, drive home, and if I'm 63. And I would have said that I probably would have never changed my behaviour. If this didn't happen. Now, of course, I run out of ink, or before I run out of ink, I've ordered it online. It gets delivered the next day or the day after, and some of those macro trends. It's just how do you position yourself for those, and they're trends that we're seeing occur now, but are really significant sort of medium long-term adjustments in our behaviour.
I obviously there is this work from home mentality. Although I can't see it being a 100% shift to that. It's definitely a shift that's happened. It's going to be here for a while. And even in Adelaide, Geoff, we're seeing a lot of what I call imported inflation in our property market out of the Sydney and Melbourne market, even out of Hong Kong, Singapore. So it's really how people are now really setting themselves up for the next 10 and 20 years of their life. I find really interesting in a change of behaviour.
No, definitely, and those trends, probably there'll be continually that move domestically in terms of whether it's to the regions or whether it's to more affordable cities or more livable cities. To me, Adelaide's one of the most livable cities in Australia. So you get that, and then, but I'd assume that'll be a medium long-term trend. But also once that everyone's travelling overseas again, there's 50 or 60 billion dollars of money that Australians spent per annum historically on international travel.
Outbound,
that's been that's been kept in Australia. So but once all the borders are open again, then that money will go offshore again. So there'll be a bit of an easing off on a significant pressure.
Yeah, I agree. Geoff, did you read the news last week about 2 million immigrants coming into this country? There was I don't know which part of the government sort of flagged that, but I've always believed that we're going to look like David Jones at the Boxing Day sales when the borders reopen, where there's going to be people lined up. But I thought, 500,000 or 600,000 people. I heard the number of 2 million people, and it made me shudder a little bit. Do you have any view of what that might mean for the Australian economy?
Yeah, in theory, it has to be positive. Whether it's 2 million people or whatever it is, like immigration is a driver. It's an economic driver. It obviously drives prosperity. You'd assume, you'd hope productivity in terms of the quality of the people that come in, and it would probably drive demand for housing, etc. So I was probably a year or so ago, I was of the view that should be that should be a strategy for the government, really, to attract high quality individuals into Australia, and I suppose it was just to, in theory, the last year or so has been COVID politics, and we're probably still in COVID politics. But when we come out the other side, you'd assume that Australia, it's proof of how well the health system at this point in time has performed. And as you said, it would be a very desirable place to be.
Yeah. Do you have any final words for people out there at the moment? They've obviously got the FGG funds. What we could expect for the next 12 months or 3 years from FGG?
Both with FGG and FGX, what we've got the best boutique fund managers managing these pools of capital. One of the positive things is, if you look at them now, they're actually trading a little bit below the value of their assets. And if you look closely at the results that have just been announced in the last month or so, you'll see that both FGX and FGG have increased their dividends. FGX by 15% and FGG by 50%.
Wow.
Now, those increases in dividends has really been a reflection of the strong performance of the fund managers over since they've been listed. And that's allowed the profit reserves to grow to quite sizable amounts. So with FGG, historically, it really didn't pay much in the way of dividends, and it only paid one dividend a year. You'd assume that will change to 2 dividends a year. So you've just had an increase from 2 to 3 cents. it's fair to assume that the next dividend would probably be 3 cents again, and then the plan would be, to gently increase that dividend over time.
Yeah.
And with FGX, they pay 2 dividends a year, but the board was trying to show a clear sign to shareholders by increasing the dividend by 15% odd.
Yep.
So I would assume, that over the next period, we've got a new CEO, which you met Carolyn the other day. She's a class act.
Yeah.
And as she, we did have a period with 6 months. We had to wait for Carolyn to join us, which we were very happy as a board with. But she'll go out telling the story, and you'd assume the share price will more fully reflect the value of the assets, if not trade above that. And the great thing is, you've got a growing stream of fully franked dividends from both FGG and FGX. So to me, and you've got a good diversified portfolio. So I'm very relaxed with both those entities.
Beautiful. Mate, thanks for joining us today. I know you've had a long day on the Zoom call, so enjoy your weekend and good luck getting out of lockdown. So hope it happens all soon.
No, thanks, Tony.
Oh, good. Thanks,
for all
Geoff.
your support. Thanks, mate.
Kevin, I've got this gigantic, I love giving out gigantic checks. So the funds that we're handing over tonight on behalf of all the clients is over $63,000. And I'm sure that the Operation Flinders team will do something very, very good with it. So
we will do. Thank you very much.
Thank you, buddy. Cheers. Thank you.
And thank you to the investors as well.
Yeah.
Oh, well,
This is good news.
They're the ones that actually make this happen. I mean, it's pretty incredible, actually. It's wonderful the work you do.
Thanks, Caroline. I appreciate it.
I'll just put this in my back pocket.